Now please join me in a toast to the development and prosperity of China and the United States and the well-being of our people, to the bright future of China-US relations and the friendship between the two peoples, and to the health of President Trump and all the friends present.
Well, thank you very much. This is a great honor. It was a fantastic day. And in particular, I want to thank President Xi, my friend, for this magnificent welcome. And it really was a magnificent welcome like none other. And for so graciously hosting us on this very historic state visit. We had extremely positive and productive conversations and meetings today with the Chinese delegation earlier. And this evening is another cherished opportunity to discuss among friends some of the things that we discussed today, all good for the United States and for China.
A busy week for global and business diplomacy, whether in Beijing, Kenya, or Kigali, as a renewed China-US détente unfolded and Africa showcased an emerging investment destination. But what could the bull do in a China shop apart from tread gently? Xi Jinping warned America to be cautious not to fall into the Thucydides Trap. The trap metaphor asserts China as a rising power in a narrative with the rising force threatening to displace the ruling power. That's the US, causing tensions that lead to war. And it comes from the ancient Greek historian Thucydides, who wrote concerning the Peloponnesian War, where the rise of Athens inspired fears that eventually made war inevitable in Sparta. Later, Harvard political scientist Graham Allison in 2017, from his research, found that out of 16 cases since 1500 where a rising power challenged a ruling power, 12 cases ended in war. So how does all this affect Africa? Also, as CEOs and political and thought leaders met at the Africa CEO Forum 2026 in Kigali, focused on the idea that scale is no longer operational but the first line of defense, where capital is concentrating in larger integrated markets. An integrated Africa can be the world's next big investment bet. Hello, this is Global Business Insights, where we bring perspectives that help to navigate the more challenging context. We look today at how nations are recalibrating investment postures and especially why the unfolding US-China détente matters. Xi said the US and China must avoid a path to war, warning that any mishandling of Taiwan could place a fragile détente in great jeopardy. US Secretary of State Marco Rubio said the US is not trying to contain China, but to use its capital, talent, and private sector strength to drive innovation and widen the lead Beijing wants to close. One view is that China has used domestic capability and the global system the US helped build after the Second World War to challenge American economic leadership more openly. In response, the US is now protecting itself by pulling back from some of those arrangements and targeting parts of China's geopolitical support network, including Iran and Venezuela. Today's America is increasingly transactional. It is not seeking a strategic marriage with China. What it wants is a workable relationship that avoids a conflict neither side would benefit from. For Africa, a less accommodating and less multilateral America means the old Bretton Woods mindset no longer fits. By bringing in top CEOs, the US is now signaling that it is in a different battlefield, technology and economic competition. What should Africa learn? The 23 billion euro France-Africa summit and the shared ownership debate in Kigali must move beyond selling promise and untapped potential. The real task could be to solve concrete problems like weak infrastructure, especially electricity, growing distrust among African states, slow regional integration, and fragile governance and political institutions that still lack accountability. The US and China may already have fallen in a Thucydides trap, but this contest is unlike the Spartan war. Today's struggle is increasingly being fought with trade, technology, and economic leverage. That explains why the US is fielding corporate heavyweights from Citigroup, JP Morgan, Nvidia, Apple, Microsoft, and SpaceX. As the US and China race to lead the AI and digital revolution, the digital and well-being gap between the West and Africa will widen quickly. Africa's political and business leaders must recognize that closing these gaps will require investing heavily in skills, education, infrastructure, and the fight against hunger and poverty. Nigeria's President Tinubu puts it colorfully: if an African child is assured of a good sandwich and a classroom or one egg a day, there will be no fear of learning. Instead of embracing knowledge, there is still fear that education will create new forms of dependence instead of dismantling old ones. Progress in learning, research, and education is very gradual. China and the United States reached their current position only after decades of sustained discipline. There are no shortcuts. Africa must educate all its citizens and equip its young people with the skills needed for the future. The high cost of ignorance and weak infrastructure should be a wake-up call in a fast-changing knowledge economy that will not wait for Africa. So far, we hear China will help to resolve the Iran war, will buy more oil from the US, buy 200 more Boeing jets, and will buy more US-designed chips and soybeans, as well as agricultural products. The US is already easing restrictions on Chinese access to NVIDIA chips. The US are not afraid of collaboration as long as it does not hinder extending the technological lead. Africa can also learn that strength earns respect. Despite Beijing's lapses and Washington's quirks, China's discipline and undisputable rise have drawn global business and political leaders to a state dinner in Beijing, reinforcing its status as an equal power. Xi Jinping spoke of partnership rather than rivalry as a path to stability, peace, and progress, while warning against interference over Taiwan. Trump, unusually respectful and cordial, praised US-China ties as invited Xi to the White House on the 24th of September. As details are being worked out, both sides may still find more mutual gains. Africa cannot be a bystander in the technology-driven competition shaped by enterprise and digitization. It must earn respect in that arena or risk being collateral damage as US-China tech rivalry deepens divisions within the continent and undermines its cohesion. Africa needs bold, defensive, and niche attack strategies built on its own strengths, resources, and talent. It should expect less aid and fewer concessions, mobilize more capital from within the continent, and make integration its highest priority. Improving governance is essential. As Nnamdi Obasi, Nigeria's senior advisor at the International Crisis Group, wrote in Foreign Affairs, weak governance at federal, state, and local levels fuels Nigeria's security crisis. He argues that sustained investment in governance and institutional capacity could reverse that decline and limit the spillover effects of worsening violence on neighbors and international partners. Strip away the theater and the picture is stark. Beijing remains deeply skilled in propaganda, strategic deception, and operating with limited political accountability. The Communist Party was built on a narrative of resistance to Western power, and that historic mission still echoes through its ambitions even today. Now, as China's commercial, technological, and security interests stretch from Arctic sea routes to Gulf oil supplies, the stakes are rising fast. And as those interests come under pressure, Beijing may find itself pulled ever deeper into intervention, not just to defend its position, but to shape the global order it believes it needs to catch up with and ultimately overtake the United States. My view is that Africa may soon face a more assertive China-led investment push, offering the capital Africa urgently needs, but most likely expecting political alignment in return. That could still benefit Africa if the terms are right. The priorities are clear and the relationship is managed carefully.
We got a lot of support. First of all, we were actually meant to fund most of this from our internally generated funds. But because of the devaluation, so we have to now rely on Afrexim Bank, African Finance Corporation, Zenith Bank, Access Bank, UBA, and some of the local banks. But of course, we also have a very good relationship with the Standard Bank of South Africa, and at the beginning, Standard Chartered Bank of UK. We were very, 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 very lucky. And what happened when we finished the refinery, things now have turned out to be much more than our own expectations.
Still on Africa, Aliko Dangote has confirmed rejecting an offer from the Nigerian National Petroleum Company Limited to increase its stake in the Dangote Petroleum Refinery. NNPC currently holds about 7.25% of the refinery rather than its planned 20%. Dangote Refinery already announced plans for an initial public offering to allow wider Nigerian ownership. To some data releases, U.S. retail sales rose by 0.5% on a monthly basis in April to $757.1 billion. This came after the 1.6% increase revised from 1.7% recorded in March, also in line with market expectation. Some good news: in the UK, gross domestic product growth accelerated to 0.6% in Q1 from 0.2% in Q4 last year, and the monthly data also surprised with 0.3% month-on-month growth against expectations of a 0.2% contraction. The pound remains weak due to political instability as Starmer faces mounting pressure despite GDP data easing some fears of a sharp downturn linked to the Iran war. Crude oil prices were flat, Brent still over $100 as markets noted China's offer to support the US to resolve the crisis amid news of flaring tensions as a ship is seized and another is sunk near the Strait of Hormuz. Back to Beijing, Xi reportedly welcomed US interest in doing more business in China, saying that China's door will only open wider. Tesla's Elon Musk, Nvidia's Jensen Huang, and Apple's Tim Cook were all said to be upbeat about the summit. There is clear optimism around artificial intelligence, technology, and especially chip stocks as attention turns to possible opportunities, despite the still wider tensions, including the war in Iran and the issue of Taiwan. President Xi Jinping confirmed that both sides reached important consensus on keeping trade ties stable after a final meeting just before Trump departed for Washington today. Meanwhile, markets are reading the shifting dynamics positively as Trump's trip to China fuels hope of better trade between the two nations. On Wall Street, the S&P 500 and Nasdaq also gained ground, hitting new record highs, helped by a jump in Nvidia shares as it was reported that the US government cleared about 10 Chinese firms to buy its second most powerful AI chip, the H200. European markets also finished the day higher. Kevin Walsh is now finally confirmed to serve as the 17th chair of the Federal Reserve as Jerome Powell bows out from that role today, while he still remains on the Federal Open Market Committee as a governor. Well, that's it on this special episode of Global Business Insights. We are now on Spotify, Apple Podcasts and most popular podcast platforms. So do please follow us and support us on those platforms. This is Bode Oshosami. Thanks for watching, and please follow and hit the notification button. Bye-bye.